I was genuinely torn while scripting this video. For the sake of getting more views, I could have just titled it Advanced Order Block Trading Strategy or some sort like any typical ICT style clickbait and be done with it. But instead, I think it's only fair to let you decide whether trading with the order block concept is truly a viable strategy. Order block is one of the most famous, if not the most famous ICT concepts, especially among new traders drawn to its simplicity. At its core, trading order blocks is a form of pattern-based strategy that identifies key price levels where the market often reacts strongly and may even reverse. And I truly can't stress the word pattern here enough. You'll see why as we move into the definition of an order block. To identify an order block, three key elements are required. First, the candidate candle. This is typically the last bearish red candle before a significant bullish move, or the last bullish green candle before a strong bearish move. Second, the liquidity sweep. The candidate candle must take out a high or low of the previous candles, signaling a sweep of liquidity from existing orders, allegedly. And the third, the confirmation condition. There must be a break of structure, BOS, following the suspected order block, ideally accompanied by fair value gaps, FVGs, to strengthen the validity of the zone. Note that BOS here represent both BOS and MSS for simplicity. The idea is that price will move sharply away from the order block, and when it returns to retest it, there's a high probability it will resume its original direction, offering potential trade opportunities. Let's take a look at a real chart example to see how order blocks work. This is a Euro to US dollar H4 chart. Here we have a potential candidate for an order block. As you can see, it's the last bullish candle before a significant drop, which meets the first requirement. Secondly, this candle sweeps the high of the previous one, satisfying the liquidity grab condition. Finally, the move down that follows creates multiple fair value gaps and marks a clear shift in market structure. So, this confirms it as a valid order block. And as shown on the chart, price eventually comes back to retest the order block before continuing its downward move, just as the concept suggests. Now, here's what I don't like about this example, and about the order block pattern in general. First, you often have to go to great lengths to find a clean pattern that matches the textbook definition of an order block, especially on higher time frames. Sure, you could argue that dropping down to a lower time frame reveals more of them, but here's the real question. How many of those actually play out as expected? Second, this is a textbook case of hindsight bias. We're pointing to a candle after the fact, after the price has already reacted and moved, and calling it an order block. It looks clean and perfect only because the market already did what it was supposed to do. And that's the core issue. These patterns look convincing only after the move has happened. But when the market is actively moving, not so much. You're unlikely to stack up consistent wins just by blindly following an order block pattern. Because here's the truth, price moves for many reasons, and the presence of an order block is rarely the main driver. Lastly, this pattern oversimplifies trading as a whole. It leaves out crucial context. What's the current trend? What phase is the market in? Where's the liquidity? What other confluences are present? By focusing only on the pattern, traders risk falling into a trap, not knowing what to do next. Let's say you identify a potential order block in real time. Great. Now the price pulls back, seemingly to retest that level. But what if it doesn't hold? What if price blows right through it? What's the plan then? Is asking, is this a legit order block? Even the right question? To summarize, I'd argue, order blocks on their own are not enough to form a complete trading strategy. At best, they serve as a supporting confluence, not the entire reason for a trade. Here are the steps I'd recommend if you want to incorporate order blocks into your trading strategy. Step 1. Use order blocks only from higher time frames. If you're going to rely on order blocks, at least choose those that appear on higher time frames, like the H4 or D1. Why? Because lower time frames are full of noise. You'll find far too many so-called order blocks that look valid but don't hold up in live price action. Higher time frame blocks tend to reflect more meaningful institutional activity, which gives them better odds of holding. Step 2. Combine order blocks with market structure. Don't trade order blocks in isolation. Context is everything. The best setups appear when the market is already trending or showing a clean structure. Try looking for order blocks that form at key pivot points, like pullbacks within a trend or areas around old highs or lows. When price pulls back into a well-placed order block within a trending market, the odds of a meaningful reaction are much higher. Let's take a look at an example of trading using order block cherry picking alerted. The market has shown us a clear uptrend. Here we spot a potential order block. There is also a break of structure on H4 timeframe. Also a fair value gap leaving by price disruptly went up. Hence we expect when price comes down, retest the order block, there would be a reaction. Let's drop down to M15 chart. Here we have a clear market structure shift. And multiple fair value gaps. We could use the newer fair value gap as entry model by placing a buy limit order there on the top of the fair value gap. As for the take profit target, of course we can aim for the old high up there, but I prefer low-hanging fruit as the closer high here, so we will adjust the stop loss for a risk to reward of 1 to 2. As you can see, the trade went through swiftly to TP after 2 candles. Coming back to the old high, if we aim for it, it's also fine, only now the trade would take much longer. If you found this video helpful, hit that like button, subscribe, and drop any questions in the comments below. Thanks for watching and happy trading.